morning and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. Today we'll start by focusing on the Ukraine and Russia situation, which has continued to evolve over the weekend as you would expect, and we've heard from world governments in terms of announcing further enhanced sanctions. We've heard sanctions on the Russian central bank, which will limit or stop them from transacting with world institutions and really limit the availability to monies for not only for the Russian central bank but also for domestic central banks. We heard from the S&P rating agency that have downgraded their Russian foreign currency credit rating down to junk, going from a BB+ to BBB-. The Russian ruble, we've seen significant weakness in that, as you would expect, given the sanctions that have been announced. That was down 28% against the US dollar. In response to fears of bank runs within Russia and to help protect the Russian ruble, you've seen the Russian central bank increase interest rates quite significantly, going from 9.5% to 20%. We also heard from BP over the weekend. They have a sizable investment in Rosneft, and they're looking to divest from that investment, which is cost approximately $25 billion. The world's largest sovereign wealth fund in Norway, they also are looking to divest from Russian assets, given the geopolitical risks that are out there. Global equities on Friday were positive, rebounding well after Thursday losses, which you often find after times of stress. Markets are very volatile. What really drove equity markets on Friday? Well, it was headlines around the potential for Ukraine and Russia to negotiate, but also one of Russia's closest allies, China. They were also putting stress on Russia to help to come to some agreement with Ukraine. So equities did rebound, and that just really highlights the importance of staying invested and not trying to time markets when volatility is exceptionally high. In terms of currency moves, we saw the US dollar strengthen, which is typical, a flight to safety when there's geopolitical risk. We saw weakness within the euro and within sterling, which you'd expect given Europe's ties to Russia from an energy perspective. In commodities, it was a bit of a roller coaster ride. We saw gold trade very high up to Thursday, but then sold off given the rebound in sentiment. This morning, looking at the oil price, that's up 5% on the back of the sanctions and developments that we've seen over the weekend, now trading at $102 a barrel. In terms of economic data, on Friday we had data from the US with the personal consumption expenditure numbers. That came up very strong, up at 2.1%, showing that consumption continues to be strong in the US. In terms of the Fed's central bank, the US central bank's preferred inflation measure, that came out at 6.1% year on year, so it continues to highlight the challenge that they have of navigating a world where you've got, on the one hand, high inflation, but on the other, geopolitical risk. Expect more volatility today. Take comfort in terms of being in diversified portfolios. Many of the points I've made today will impact liquidity, energy prices and inflation, a really challenging environment for central banks to navigate. But if there are any questions, please don't hesitate to send them through to the True Potential team. That's everything from me today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.